Let's get some analysis here. We've got Bloomberg senior economist Joseph Brusuelas with us. You were here just yesterday, as you said, almost looking at the end of the world there with that plummet in existing home sales. These figures, smaller portion of the market. We knew there was going to be a decline. Give me some perspective on what we just learned.
Well, what we're seeing here is that home buyers are caught in the grip of deflation. Deflation hasn't spread to the rest of the economy, but it's clearly infected the home buyer markets. No matter how low mortgage rates go, no matter how low prices go, home buyers simply are not going to put their feet in the water and take on a big capital investment under these economic conditions with the unemployment rate at the elevated rate it is and the expectation that prices are just going to continue to fall in the housing market. I think that these two data points have clearly got the attention of the Fed. I think that we're likely to see something now at the September meeting. We're not going to hear anything from Mr. Bernanke on this week, and he's going to ignore these numbers. But
on
boy,
Friday, you don't expect anything?
No, in Jackson Hole. But boy, we're setting up for a very interesting September Fed meeting.
You mentioned home prices. That was the other data point that crossed there. The home price index month over month, a decline there, 0.3 percentage point on an expected, pretty much flat, but expected build of 0.1 percentage point month over month. Now, when you look at sales and purchases, they're falling to the weakest pace since 1963. When we've been looking at prices, though, the question comes, is it about inventory or is it about what we learned yesterday, the high level of foreclosures, the high level of short sales there? When does the sales pace and the price decline start to move in tandem?
Okay, I think that it's more about short sales and foreclosures. That simply that you're a builder out there, you're looking at this very low record of stock, and you think, well, maybe I should dip in. But when you think about it, your cost to build are simply outweighed by the price that people can get in and pay for these short sales and foreclosures. You're simply not going to get that behavior which would actually support growth in terms of housing completions. We're really stuck in a low-level equilibrium trap here, and we're going to need some policy initiatives probably to get us out of it.
All right, big picture here. We're looking at GDP. Obviously, new home sales, they are a contributor to GDP because they're about growth, they're about construction. We also learned with durable goods today, confirmation manufacturing slowdown is still happening.
Oh yeah, no, that was a little bit, that was more troubling than this new home sales data for me.
That was a big story.
That when you look at core CapEx spending, we decelerated from roughly 30% to 20%. Now, that's nothing to get too alarmed about, but there is some concern that firms have just slammed the brakes on A, hiring, and B, on CapEx spending. If that's the case, we're going to have a very rough second half of this year.